How to use the RSI? How can we use the RSI? We can use it in several ways. First of all, it's a great tool to identify the overbought and oversold areas. If the price is in the overbought zone, it makes a lot of sense to expect that it is time to turn lower. And if it's in the oversold zone, it's only logical to expect the price to start moving higher. The second way to use RSI, and I see a lot of traders use this, is the direction of the RSI. When the RSI is pointing up, then the price should be expected to move up. When the RSI is pointing down, then the price should be moving down. The third way is the 50% level, and there's a saying that RSI usually, or not usually, sometimes changes direction around 50%, the equilibrium level. And if you see it do just that, then it may be time for the price to change direction too. So if we are rising from 20 and we top at 51 and start falling, and the price will be also, of course, rising. And when the RSI tops around the 50 and starts falling down, it may be time for the price to start falling down as well. The fourth way is that of the RSI trend lines. We can draw trend lines on the RSI just like we draw on the price itself. And when these trend lines are broken, the market will be expected to change its direction. And finally, we are saving the gold for the end. The divergence is probably the strongest way to use the RSI and the most useful one. Okay, I have some examples for you here. I will give examples on each of the ways that we just talked about. First of all, the overbought and oversold levels. You can see that under normal market conditions, when the price is trading into the overbought zone, when the RSI is trading into the overbought zone, the price is also topping. This is the norm. This is what you should expect. Okay, so when it starts falling, the price starts falling too. Okay, here we also have some kind of a copy-paste situation. You can see that the price and the RSI move hand in hand, and this is the norm. This is what you should expect for the largest part of the time. But of course, nothing is 100% when it comes to the market. When the price is in the oversold zone, it may be time to start looking for a long position or a buying setup. We need a setup, of course. Here, let me remind you quickly that just getting inside the overbought or oversold does not give us a good enough reason to go into the market. This is just an indication for you to get prepared. You know, when the price is on the overbought, okay, get ready. We might have a short position soon. When the price is in oversold, get ready. We might have a long position soon. Okay, but it does not mean that we should get in the market. Of course, sometimes the price keeps moving very close to the top for elongated periods of time, or the bottom, of course. In this case, we have the price moving up and down just right next to the 70% level, and as you can see, the RSI is moving horizontally, but the price is rising. This is one of the indications of an uptrend. When we have an uptrend, the RSI will not drop sharply to lower levels. See here, see this area, it is empty. We do not have RSI here. Why? Because we are in an uptrend. So in this kind of situation, which of course cannot be identified from the beginning, you might realize that here, right in the middle here, you know that this is an uptrend. So around here maybe, the price is not falling, RSI is not falling, it's still moving around here. you decide, okay, this is an uptrend, I'm going to buy around here, and you can obviously see that the price rose from there. Okay, we have a very simple situation, very straightforward situation here. Overbought, the RSI overbought and moves out of the overbought zone, and it drops, and the price does as well for a very, very nice move. If you followed this short signal generated here, you would be a very happy man here, 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 wherever you close. Another example, of course, as you can see, I have colored the oversold situations with red and overbought situations with blue in order for them to be clearer. Okay, here we also have in and out, and the price bottoms and start moving higher. Same thing here, we get in, we get out, and the price move lower. This is a very fast one, sharp one, poop, poop, up and down, and the price is moving lower. The second way we just talked about is the direction of the RSI. As you can see, there is a close relationship between the direction of the RSI and the direction of the price. When we are witnessing a rising RSI, we should expect the price to rise. So here we're rising, we're still rising, and the price is still here. Just let me explain what can a trader do here. The price is up, it goes down, it starts rising again. You see that the previous move is up, and now we are starting to move up again. You might like to look for a setup to go long, and you can go long around here, see, and ride the rest of this rising move. You can do the same around here. Look at this. The price goes up with the RSI. Look at this V shape on the price and V shape on the RSI. And this is the norm. Most of the time you will see that the price and RSI move hand in hand. So just by the mere slope of and direction of the RSI, you can have an indication of the trend in the market. This is a good tool, but of course it should be used within a set of tools. So if I see the RSI moving higher, like here, that would be an amazing place to buy. Of course, after the market moves, we know. But here, the price is moving higher. We dropped a little bit here. Just when the price start moving higher here, the RSI start moving higher here, the price start moving higher here. And this is a great point to go on. Okay. The 50% level. The 50% level, sometimes the price moves with the RSI until the RSI reaches the 50% level, and then they change direction together. Look at this. We have three situations on this chart. This is the New Zealand dollar for our chart, and it's recent. I took these charts, by the way, only a couple of hours before the webinar because I like to give you fresh information. I don't like to use charts that I used in training courses like a year ago or something like that. No. I always try to give you fresh charts right out of the oven so you can feel related to the current market situation. So this is a chart I took only a few hours ago. Look at this, RSI around the 50% level, and it changes direction, and the price goes up with it and then changes direction. When it tops around the 50% level, starts falling, like maybe here, it's time to go short. And you can see that this paid very well. This is a smaller case, and I wanted to include it to show you that it's not always the case to make a huge amount of pips. Sometimes it's only for a few pips. So the price here rises to the 50. The RSI rises to 50 and drops. The price rises with it and drops, but the drop is limited. It's maybe from top to bottom less than 50%, and with such a move maybe you can make 25 maximum. And that is why I want to go back to the fact that I recommend always protecting your profiting trades. When your profiting trade reaches maybe 30, 40 pips in profit, if you don't want to close it at this kind of profit, you should move the stop to the profit zone, even if it's 5 pips or 10 pips. This is the third situation, and it is the best one, obviously, on the charts. The price the RSI drops to 50%, and it's very, very accurate at the 50%. It's like maybe this could be 50.5 on the RSI indicator. And then the RSI changes its direction and the price changes direction in a very strong